You just got your first paycheck. You look at the number, and something feels off. The job said you'd earn $500, but you're only holding $420. Where did the other $80 go? That missing money didn't disappear. It went somewhere very specific. It went to the government, and it's called a tax. Today we're going to break down exactly what taxes are, why they exist, how they work, and what you actually need to know as someone who's just starting to earn money.
No jargón. No confusión.
Just facts, explained simply. Let's go. Okay, so, what actually is a tax? A tax is money that the government takes from the things you earn or buy, so it can pay for things that everyone uses. Think roads, schools, hospitals, fire departments, police, the military. The government needs money to run all of that, and that money comes from us, the people. Taxes aren't optional. They're required by law. If you earn money, the government gets a cut. That's been true for thousands of years. Ancient Egypt collected taxes, Rome collected taxes, and today, pretty much every country in the world does too. There are actually many different types of taxes. But for most young people, the two you'll deal with first are income tax, which comes out of your paycheck, and sales tax, which gets added when you buy things at a store. Let's start with income tax, since that's the one that hits different when you see your first paycheck. Income tax is exactly what it sounds like. A tax on your income. The money you earn from a job. In the US, there are two levels of income tax: federal, which goes to the national government, and state, which goes to your specific state. Some states have no income tax at all, like Florida and Texas. Others, like California and New York, have higher rates. Now here's where it gets interesting. The government doesn't just take one flat percentage from everyone. Instead, they use something called tax brackets. The more you earn, the higher percentage you pay, but only on the amount above each bracket. Let me show you what I mean. Let's say you're 17 and working part-time. You earn $10,000 for the year. The first roughly $11,600 you earn is taxed at 10%. So on $10,000, you'd owe about $1,000 in federal income tax. That's it. Now let's say you earn $50,000. The first $11,600 is taxed at 10%. The next chunk, from $11,600 to $47,150, is taxed at 12%. And only the amount above $47,150 hits the 22% bracket. You're not taxed at 22% on everything, just on that top slice. This system is called a progressive tax. The idea is that people who earn more can afford to contribute a higher percentage, while lower earners are protected from handing over too much. Okay, so the government takes your money, but where does it actually go? This is one of those things most people never actually look up, so let's break it down. According to the US government's own data, here's roughly how federal tax money gets spent. About 25% goes to Social Security, that's monthly payments to retired people and those with disabilities. Around 15% goes to Medicare and Medicaid, health insurance for elderly and low-income people. About 13% goes to national defense and the military. And the rest goes toward things like education, transportation, federal employee salaries, interest on government debt, and more. So when you pay taxes, you're not just handing money to some faceless government. You're contributing to the roads you drive on, the public school system, the emergency services that show up when you call 911, and the safety nets that support millions of people who need help. Whether you agree with how every dollar is spent, that's a whole other conversation. But at least now you know where it's going. So how does the government actually collect your tax money? Do you have to write a check every week? No, and here's why. When you get a job, your employer takes taxes out of your paycheck automatically before you even see it. This is called withholding. Your employer basically acts as a middleman. They hold back a portion of your earnings and send it straight to the IRS on your behalf. That's why your paycheck is always less than your full hourly rate times hours worked. When you start a job, you fill out something called a W-4 form. This tells your employer how much to withhold from your paychecks. If you don't fill it out correctly, too much or too little might be taken. Then, at the start of each year, usually by the end of January, your employer sends you a W-2 form. This is a summary of everything you earned and everything that was withheld in taxes over the past year. You use your W-2 to file your tax return, which is basically just a report you send to the IRS saying, here's what I earned, here's what was taken, did I pay the right amount? If too much was taken out, you get a tax refund. If not enough was taken, you owe the difference. The deadline to file your federal taxes is usually April 15th. If you're a teen with a part-time job and your income is low, there are free tools to file online in minutes. Alright, rapid-fire facts about taxes. Let's go. Fact 1. The U.S. introduced a permanent federal income tax in 1913. Before that, the government mostly made money from tariffs, taxes on imported goods. Fact 2. If you earn less than the standard deduction, which in 2024 is $14,600 for a single person, you may owe zero federal income tax. A lot of teenagers fall under this threshold. Fact 3. Sales tax varies wildly by state. Oregon, Montana, New Hampshire, Delaware, and Alaska have zero state sales tax. Louisiana and Tennessee have among the highest, topping 9%. Fact 4. There are also FICA taxes, that stands for Federal Insurance Contributions Act. Every paycheck, 6.2% goes to Social Security and 1.45% goes to Medicare. These are separate from income tax, and almost everyone pays them. Fact 5. The IRS, the Internal Revenue Service, is the U.S. government agency responsible for collecting taxes. It processes around 260 million tax returns per year. And that's taxes, explained simply.
No jargon, no headache.
Just the facts you actually need to know. To recap, taxes are money the government collects to fund public services. Income tax is taken from what you earn, through a system of brackets. Your employer withholds it automatically. You file a return once a year. And where it goes: roads, schools, healthcare, defense, and a whole lot more. If you found this helpful, subscribe to Finance Daffy. I break down money topics just like this every week, in the simplest way possible. And if you have a money topic you want me to explain next, drop it in the comments. I read all of them. I'm Daffy, and money doesn't have to be complicated. See you in the next one.